Welcome to the Hurst Trading Room. This is the video update for the 10th of December 2012. And as always, we need to, first of all, please make sure that you have read and understood these disclaimers before we take a look at the markets. Let's start with the S&P 500. Last week, as you will know, we were in a profitable trading opportunity. It was an A category trading opportunity, which we entered back here on the 20th of November, I believe, as price crossed up over the 20-day FLD, and our T1 exit was taken out that Friday, and our T2 exit was taken out about 10 days ago at that level over there, and our T3 exit was effected last week on Tuesday over there. So that was our T3 exit. We made slightly more money in our trade 3 than we did in our trade 1, but less money than we did in our trade 2, and that's often the way that things happen. Now, in last week's video, I mentioned that, of course, I was expecting the markets to come down to the 20-day FLD for the B category interaction, and I think that you can see that that is indeed exactly what happened, and price came down to the 20-day FLD over here. Instead of tracking along that FLD, it bounced up off the FLD, and so as it came down to the FLD, that's a B category interaction. As it bounced up again, that was a C, or is a C category interaction. And so, as I mentioned in last week's video, I was standing by to enter into a C category trade. You must remember that a B category interaction is really little more than an alarm, an alert, standby for your C category long trade. So let's have a look at what happened there. As you know, I speak about the bubble between the 10-day FLD and the 20-day FLD, and a pretty perfect bubble formed last week, and price came down into that bubble, of course, for the B category interaction, and as it broke up out of that bubble, as it crossed the 10-day FLD, I entered my C category trade over there at that level. I think it was 14.14 or 14.13, somewhere around about there, and got into the C category long trade. So now we're in a C category long trade here for the S&P 500. As you can see, on Friday, price came to within a few points of that T1 target. Isn't that frustrating? It came right there, almost took us to our risk reduction part of the process, where we would have exited trade 1 for a small profit and reduced our risk by raising our stop loss. But of course that didn't happen. Now price has fallen back down to the 20-day FLD, and that is a little bit worrying. We don't expect price to fall back to the FLD after it has successfully performed its break, unless, of course, we're looking at our next interaction already, which would be a D category short trade. Now, as you can see, I haven't entered short. I haven't entered my short trade. Why is that? Well, because there have only been 23 bars since the most recent 20-week cycle trough. And so I believe we need to give the market a little bit of room and let it fulfill its C category trading opportunity. If it turns out to be a failure, well, then that's too bad. Then of course we'll get out of it at a loss. But there is still the possibility that it will rise up, and we'll end up taking profits on our C category trade. And the D category trade will come next. I don't think the D category trade is happening right now. I just think it's a bit too early. Now, what happens if price does fall down? Let's play devil's advocate. And what happens if price falls down? Do we scramble about to get into our D category trade? No, we don't. If that does happen, then it means we're too late to enter this D category trade. You can't get every single trading opportunity. There are so many markets you can trade, and so many trading opportunities in all those markets, that we don't scramble around. That is not a good setup. It's not a perfect setup. It doesn't look right yet. if the market pulls up away from the 20-day FLD, then of course we'll have a good setup for the D category short trade, which we would consider taking next. If it doesn't pull up, if it just keeps dropping, then we will have missed the D category trading opportunity, and we move on and find another trading opportunity. So let's take a look at the Nasdaq. Speaking of trading opportunities, the Nasdaq also exited the trade 3 of our profitable A category trading opportunity that we were in following this 20-week cycle trough. Here was the entry into the A category long trade, and our T1 was somewhere around about there. Our T2 was somewhere over there, and our trade 3 exited according to the 3-bar trailing stop at this level over here. Now, in last week's video, I said that what I expect next is for the market to come down to the 20-day FLD and to track along that FLD, and that would be a B category interaction. So you can see how clearly the Nasdaq did that last week. The FLD really is a very powerful line, and so you can see that exactly what we expected is what occurred. Here is the 20-day FLD. There we go, like that. And price tracked along the FLD, by which I mean the high of the bar was above it, the FLD, and the low of the bar was below it. It tracked along it Wednesday, Thursday, and Friday. Okay, so for 3 days it tracked along that FLD. Now that was the B category interaction as price came down to the FLD. Now what we expect to see is a C category interaction as price breaks back up away from that FLD. Now something interesting has happened here. The FLD jumped up over the weekend, of course, because it's a delayed median price level from about 10 days ago. And so the FLD has jumped up, and so price, although it hasn't actually moved anywhere, it's just sitting here, sitting at exactly the same level it was at last week. Price has, by default, if you like, crossed below the FLD. Now, again, we face the question in this market as to whether the C category interaction has happened and we just missed it, which can happen, but it's not that common, and whether maybe we're in a D category short trade here as well. Should we be jumping into a short trade? Well, I'm not going to jump into a short trade. No, there have been 23 days since this 20-week cycle trough over here. I still think it's a little bit premature. I would feel much happier seeing the market bounce up a little bit before coming down into its D category short trade, falling into the 40-day cycle trough. So the 40-day cycle trough is expected in about 11 days. And I just don't think, although I am bearish the US stock markets in the sort of bigger picture of things, I'm bearish the US stock markets because, of course, I'm expecting an 18-month and 40-week cycle trough to occur early next year. So I am bearish, but this just doesn't look right to me. I feel we should have a little bit of upwards movement before we get into our D category short trade. If I'm wrong, then of course the worst thing that's happened is I've missed an opportunity, and hopefully learned a lesson, and I will know not to make that mistake again. But a missed opportunity is not the end of the world, and so I do think it's important not to put too much emphasis onto getting into every single trading opportunity that you can. Sometimes things don't look quite right, and so you stay clear of them. What am I thinking of doing for the Nasdaq? I am thinking of getting into a long C category trade. As you can see over here, I have set my entry level over there. That is at the level of Friday's high, because remember, on a Monday I don't get into trades within Friday's trading range, sometimes even Thursday's trading range. So I certainly wouldn't sell short at Friday's low. I would sell short below Thursday's low if I was selling short, and I would only want to buy beyond Friday's range. So in fact, there's quite a big range, because Friday there was a big range in the Nasdaq. There's quite a big range there where price can fiddle around and not very much will happen, and I won't get into a trade. But if it does cross up above the 10-day FLD, then I would want to get into my C category trade. Now you might ask, why the 10-day FLD? As you know, we trade using the 20-day FLD, using the FLD trading strategy. So why am I not looking at that 20-day FLD? Well, I could, and tomorrow, if I face the decision of bringing this entry right down to over here, then in fact I might switch back to the 20-day FLD. But I found C category trades, you get very effective entries usually at the 10-day FLD level, and C category and H category trades are the only trades that you can enter on the basis of the 10-day FLD using the FLD trading strategy. And so I do look for those opportunities, and so that's what I'm considering at the moment. Depending on what happens today, as I've mentioned, I might rethink that, and I might place my entry at the level of the 20-day FLD. But let's see what happens today, and I will reassess that at the end of the day. Let's move on and take a look at the euro to US dollar. The euro to US dollar also exited from its trade 3 last week on Thursday, when the euro suddenly fell in value on Thursday, as you can see, and we were in a long E category trading opportunity. At least when we entered, we thought it was an E category trading opportunity because of this 40-day cycle trough over here. As you know, it was either last week or perhaps even the week before, I started wondering whether this was in fact a trough of the 20-week cycle. And so I created a chart which monitors that alternative analysis situation. But let's focus on this chart for now. This was an E category long trading opportunity that we were in. We entered at this level over here and exited. I think our T1 and T2 were both at reduced levels for various reasons we discussed at the time, and T3 made a nice profit for us up here, trade 3. Okay, following an E category interaction, what do we expect next? We expect an F category interaction, which is a short trading opportunity when price crosses back down below the 20-day FLD and heads towards the 20-week cycle trough that we're expecting according to this analysis. Okay, so according to this analysis, and it's still a very viable analysis, nothing's happened that completely dismisses it. Last week we were expecting an F category trading opportunity, and indeed I did enter a short F category trade last week. I didn't in fact enter that trade at the level of the FLD, which you can see on Thursday. Price came down to the FLD and then sort of sat there. I didn't enter at that level. I entered below the low of Thursday's trading over there. So that's the level at which I entered my F category short trade in the euro to US dollar. T1 you can see is just over here. T2 is down over here. And here's my initial stop loss right up here. Now, today, of course, price is bouncing back up again. I'm not terribly concerned about that. Price often will bounce back up towards the FLD, might even reach it. But it doesn't mean that the trade is invalid. Now, why didn't I enter as price came down to the FLD on the Thursday? Well, that's because I've got two analyses going here, and in the other analysis, the picture was slightly different, and the FLD was at a different level. So let's go and look at that chart. Where's that chart? So according to this analysis, the 20-week cycle trough occurred over here, and the long trade that we were in was in fact an A category trade. But you'll notice that the FLD is at a slightly different level on this chart, and when I saw that, I realized I would rather use the safer FLD level, which was on this chart. In other words, in terms of entering a short trade, it was just a little bit further down, so it gave the market a little bit more room to fall, which of course it looked as if they had needed on Thursday. If this was an A category trade, then why am I not expecting this to be a B category interaction? Okay, the reason for that is because of the number of bars, and let's just clear this and count the bars. There we go. There have been 26 bars since that 20-week cycle trough. Why is that different to the US stock markets? Because the US stock markets, in fact, formed their trough on the Friday of that week, on the 16th. The euro to US dollar formed the trough on the Tuesday of that week, which meant more bars have elapsed. Okay, and you can see that Sentient Trader has in fact positioned the 20-day cycle in the euro to US dollar over here, indicating that this is the B and that is the C interaction. Now, I think that although this is not a perfect interaction, it didn't quite touch the FLD, it reached towards it. I think that's a very viable analysis or interpretation of what's happening in the euro to US dollar. And what strengthens that opinion is the speed with which the market came down towards the end of last week. A B category interaction tends to be more of a corrective move in Elliott wave terms, sort of bouncing around, fiddling about, not the strong determined move that we saw last week. So according to this analysis, that move that we saw last week was probably, I suspect, the opportunity to enter a D category short trade. Now you'll know on the other chart I entered an F category short trade. Okay, it doesn't actually make very much difference at the time of entry whether it's a D category or an F category trade. The point is I have entered a short trade because a short trade is what I believe is appropriate at this time. If it's a D category short trade, then of course we expect E next, so I'm going to be watching it quite carefully, and if price continues to bounce up like that, then I'll say, okay, well, our D category trade turned out to be a disappointment, and it's all over, and we now need to enter our E category long trade. If, however, price does keep moving down and then comes back towards the FLD over here, then I will say that is probably an F category short trade, and we're looking at G next and not E next. Okay, so here's a very good example of when you have two different analyses and there's no absolutely convincing proof one way or the other which analysis is true. And it doesn't really matter when it comes down to trading the market, because both analyses are indicating that a short trade is appropriate. And so we enter the short trade, we get into the market, and depending on how the market behaves after that, we will get, of course, more information about which analysis was really the true analysis. So that's the situation with the euro to US dollar. Let's finally take a look at the British pound to US dollar. The British pound to US dollar is a really fascinating instrument to analyze and trade, because I believe it bridges the gap between the euro to US dollar and the US stock markets. I don't know why it does that. No doubt it's got something to do with having a British pound in it and having a US dollar in it. There's probably a simple explanation, but it often tends to bridge the gap. And that is certainly the case in the British pound to US dollar at the moment. Again, the British pound to US dollar also exited the trade 3 last week as it came down and took out its 3-bar trailing stop over there, and that was also a very profitable A category trading opportunity. There was T1, there was T2. Both of those targets were hit 2 days after entry, so it was a fantastic example of a very quick A category long trade. Our trade 3 lingered for a full almost 3 weeks, and no, that's 2 weeks, isn't it? It lingered until it took out its 3-bar trailing stop on Friday last week. And at that point, as you can see, price also came down and touched the 20-day FLD. Now, why did I not enter short at that point? Well, because I am still of the opinion that the British pound to US dollar, similar to the US stock markets, is now coming down into its B category interaction. And what we're expecting next is a C category long trade. Okay, you'll notice that Sentient Trader has positioned the 20-day cycle trough over here. That's because it feels it's now too long for the 20-day cycle, and this British pound to US dollar sort of splits the difference between the euro and the US stock markets. There have been 24 bars or days since the 20-week cycle trough, and that means that this 20-day cycle trough, if this was the 20-day cycle trough, and that's a question mark, but if that was the 20-day cycle trough, then that in fact occurred at 21 days, which is a little bit long, but not too bad. So I still think that's the most likely scenario that is playing out here, is that we have a B interaction. We had a B interaction last week, and we're looking at the C interaction taking place this week. And so I have set an entry level, as you can see over here, at the level of the 10-day FLD. I cannot enter at the level of the 20-day FLD. There's the 20-day FLD. Price is above the 20-day FLD. I can't enter there. And so I've set my level at entry level at the level of the 10-day FLD, which is over there. So that's the level for today. Of course, it gets adjusted every day. And you'll notice I've done something interesting. I also have a short trade standing by. Now, why is that? Let me clear that and show you. A B to C category interaction is expected to be an interaction between price and FLD when price tracks along or straddles the FLD, which is what we saw in the Nasdaq, and it's what we're seeing already so far today in the British pound to US dollar. So this does look very likely to be that interaction. However, it is just possible that Sentient Trader is right and that that 20-day cycle did occur back here. Whether it was here or here, we could debate. Not really that important now. But if that is the case, then this was B and that was C. And I know there are some people doing the training course that actually took that trade. Okay, B and then C. And so that means we've seen our B and C category interaction. What comes next? D, of course, which is a short trade. And so that's why I have set this entry level over here. If price drops down below Friday's low, then, and of course as the week progresses I might well adjust this level, then it would seem likely that, seeing as there have been 24 bars since the 20-week cycle trough, it would seem likely that we are now in our D category trade. Now, I mentioned a moment ago that we're seeing price tracking along the FLD, which of course it often does between B and C interactions. So that's one clue that this might be a B or C interaction. But price does sometimes track along an FLD at other times as well. FLDs are very powerful levels, very powerful lines, and sometimes price will come down to the FLD and track along it for just a day or two and then drop down below it. It's not what we normally expect at a D category interaction. So I have reduced my risk on this particular trade. I'm not that confident about it, but I have set it up in case price does suddenly turn down and drop down into the 40-day cycle trough, which of course you can see we're expecting to occur sometime next week. So it's not that far away from the D. From the 40-day cycle trough, and therefore the D category trading opportunity will present itself fairly soon. And so that concludes our 4 instruments that we are tracking in the Hurst trading room. I hope that you all have a fantastic and a very profitable week. And I will see you either later this week or again on Monday next week in the Hurst trading room. If you have any questions or any comments, please put them into the comment boxes and we'll do our best to answer all the questions and respond to any suggestions or comments that you have.